Call me maybe. A couple more moves we'd like to look at today. I was looking at Ford right here. We got two contracts on Ford at 1250, expiring 4/6. I think we might roll those out and up. Let's take a look at Ford. See when that next when they're going to pay that next dividend. So we've got ex-dividend date of February 10th on the board. So we need to go to dividend history right over here on the Seeking Alpha, and let's estimate when they may pay that next dividend. And the last round was pretty juicy, had that big extra, that special bonus dividend of 65 cents a share. That was very nice to go along with the 15 cents. So I collected all of those dollar bills. So if you look at last year, their next ex-dividend date for that second round of dividends was in April, but that first one was at the end of January. So we've got February 10th there. So if we were to estimate maybe mid-May instead of the third to third and a half week of April. So if we estimated at mid-May, we tried to roll this Ford call option out and up. So if we can get this to like $13, because as you can see, if we did nothing and this didn't change, it's at 1254 right now, these shares would be called away, and that's 200 shares that we'd like to keep. I think we have only 300 shares total of Ford, because last time we had, I don't know, 400 shares or so called away at 1350, which was just fine with us. It was. But let's roll it up a little bit, roll it out, roll it up, rawhide, and see if we can't then also collect that next dividend. So if we looked at that third week of May, that'd be 46 days out. And if we rolled up 50 cents to $13, that would add $100 to our bottom line net, instead of having those shares collected away at 1250, 200 shares. We'd roll that up to 13, so that's extra $100. Plus, we can collect some more credit right here, another $54 credit. I think I'd like to do that, please, Santa. So let's try that right now. Please. Excuse me, I'm choking on my own laughter. That line, please, Santa, little Maya Coco, who's now 20 years old. Maya Coco, she'd be sitting on the couch when she was like 3 or 4 years old watching cartoons. Then the commercials would come on, selling toys to kids, and whatever it was advertising, she would always say, "I want that, please, Santa." So we still say that today every time Maya wants something, which is often. Let's go to 28 cents. See if we can. Are we gonna need to go to 27? I'll do it just to do it. 27 cents, collect the $54 credit now, and roll it up another 50 cents per share. I'll do that trade in a heartbeat, because you know what? I do believe in Ford. I do drive a 1991 Ford Mustang GT on occasion. It is a convertible. It's white with red interior. And baby, when I say ice, ice, baby, let me know if that rings a bell for you. Let's roll this covered call. And they filled there. So that is off the board. Let's go back here and let's peek at SPY just to see what's up. 409.56. So it was getting down into the low. How low can you go? 409s. And I don't necessarily want to babysit that while I am out and about on my real estate appointment. So where are we on that? We are roughly 66% into our profit, $40. But would we be able to close that now? Would we be able to close it? We have 10 contracts, right? So that'd be $20. Would we be able to close it? So if we bought it back for $20, and then we would leave with $40 in our pocket in approximately 1 hour. If you look at that trade, was just over an hour ago. So $40 in an hour. I would do that. I really would, to prevent having to babysit this at all while I am out helping a friend with the sale of their home. Let's take a look. We'll leave it for now. I still need to eat lunch, still need to shower, eat lunch, get dressed, and we'll check on this, and hopefully this won't go awry. If this goes back down or continues to go sideways, we will continue to be in the money. If it turns against me in the meantime, then you know what? It's just the chance you got to take, because you got to roll the dice and take your chances. Let's go back here. There's another trade. I was going to let this Valero Energy call just be taken away at 132, but then I was like, well, let's just take a look. I love the company Valero Energy. Look at the spread between where it's at now. It's almost at $139. Well, no, it is at $139, and we would be allowing those to go away at 132. But if we look at our cost basis, we are at 129.61. So, from a Wheel of Fortune basis only, then we would be just fine, because we would then take the money and wait for another dip, buy some more stock or sell some puts, whatever the case may be. But I was thinking, you know what, let's look at when they pay their next dividend, and maybe we will just roll that thing out, try to collect some credit now, get a little bit more dollar bills on our share appreciation. We probably won't be able to get up to that number and cover a debit on the roll. But if we look at the dividend history, yeah, they should be going ex-dividend again before that third week of May. So if we looked at the third week of May for Valero, because we want to collect their sweet dividend, what is it right here? It's $1 a share, so just over $1 a share, $1.02. So on this trade alone, that'd be $102 worth of dividends, because this, I think, is only one contract, right? Let's go to that position. There's our 132 expiring. Then we've got a 135 that we just rolled out, right? I thought I had more shares than 200. Nope, just 200 shares of Valero. So if we looked at this 132 and tried to roll that out to the third week of May, can we collect a nice premium and lock in that next dividend and roll up? So we're at the 132, right? So $132. So that would be $13,200 I would get if these shares were called away. But if we roll up to the 135 and collect this the premium, the difference between this debit of 750 and this 1003, we would then add the difference there. So that'd be $300 added to our bottom line between the strike prices, $102 in dividends, and $253 roughly on the premium for rolling, and it's only 46 days out. So sometimes you just got to stuff the money in your pocket and move on with your life. I'd like to get it filled now. So what if we go 240? Can we hear 245? Can we hear 250? Let's try for the 250. Rolling that thing out to the third week of May, because OPEC decided, hey, we are cutting our oil production again, which was a shock to the system. So oil has surged 5% today, which means companies like Valero and Dividend Energy and Coterra, some of our sweetheart energy companies, are all rocking out today. Oh, take a look again. What is it doing today? Valero it was really riding high, and then it went down and up, going back up again. So is that why our roll hasn't filled yet? Let's take a look. Let's replace that order and get that filled right here in this video. Right before your very eyes, we got to go back to that third week of May, because we want to collect that. We want to roll it out and up to 135, collect some nice premium to lock in that next dividend and that share appreciation. So if we just go simple $245, hopefully that can just fill right away, put that in our pocket and move on to the next trade. So there it did. So there's $245 for sure, and the $102 from the dividend for sure. So both of those are a sure thing. The share appreciation is not, but it would be called away this Friday at 132. That part's almost guaranteed. So why not just roll the dice a little bit and put some guaranteed money in your pocket with the upside for more? SPY is currently at 409.66. So we'll continue to watch that for now. because I don't think I can get out of this at $40 or at $20. I think right now I'd have to go up to the 30. So that would be, it's still telling me, I don't know why it's saying it's a low likelihood of filling. That should fill right up. Cost me $30 to buy that trade back against our 60 that we collected. So $30 in profit is better than nothing. It is better than nothing. But for the moment, we'll just continue to watch that. Maybe, and hopefully we won't regret not making the trade right now. Or should we just go for it? $30 is way better than nothing. Let's just see if it fills just right at this very moment, costing us $30. And then we keep $30 profit, and there's 9, 10. Okay, all done. So we are out of that trade. We released the $2,000 in collateral. It cost us $30 to get out of it, which means we collected $30. So there's the two numbers. $60 minus 30 equals $30 in about an hour. So we'll take the $30. That buys Sparkle Barbie about, I don't know, 4 more Starbucks. So we got that going for us. So there we have it. Thanks for tuning in. Make sure to check back. This will likely be the last video of this trading day, but I do have some updates to give you. I got some updates over here. Wait, don't show them. Don't show them the bottom line. I got March update on the option trades, plus dividends collected, plus interest collected on our extra cash in the settlement account. And what that means, because somebody had asked me, where does that interest come from? So if we look down here at cash earning interest, so that's cash that we're just sitting on within this brokerage account that is collecting an interest rate of 4.4%. So that is a nice number because the Fed keeps raising the rates. There's a lot of downside to it, but the upside for the cash investor in this settlement account I have here with Robinhood, almost $800,000, collecting interest at 4.4%. So I will be giving you a March update either today or first thing tomorrow morning. Thanks for tuning in. Subscribe, like, comment, and I'll see you in the next video.